experience in making and creating wealth over different kinds of market conditions. Our special guest today is Mr. Nishchal Maheshwari. He's the Chief Executive Officer for Institutional Equities at Centrum Broking, and over the last 3 decades or so is known for his erudite understanding of the market, a very, very quiet man who hides behind lots of data screens and comes up with excellent stock picks which do wonderfully well over different time frames. Namaste Nishchal ji, what a pleasure to host you again on Market Masters, especially at a time when we have a mild correction in what is a fantastic bull market unfolding in front of us on Dalal Street. A very warm welcome to you, sir.
Thank you. Thanks, Shell. Thanks, Sakshi. Happy to be here, and welcome to all your viewers.
Okay. Let's start, Nishchal ji, in trying to understand how you see the market at this point of time. We see incessant records being made on the small and the mid cap segment of the market, lots of retail money pouring into equities, and the blue chips also being priced fairly well in this kind of an environment. The third quarter numbers are upon us, about 44 out of 50 Nifty companies have reported. What has your understanding been of this third quarter earnings?
So let me take it two ways. Let me first talk about the earnings and then we'll go on to the markets, because I think earnings are an important part of what's really happening in the market. So third quarter earnings, if I look at overall, basically, I think around 75% of the market companies have already declared results. If I look at it, how many upgrades, how many downgrades, so we still continue to see basically the downgrades have been higher than the upgrades. So roughly around 52% companies have downgrade numbers and 43% companies have upgraded numbers. And when I said if there is more than 1% of upgrade or downgrade, I've considered that. So that is the kind of a scenario which we have. So I'm saying if I look at a broader thing, I think market is more or less to its expectations. The earnings season has been more or less to its expectation, not much of a either way up or down. Having said that, I think the concern now remains to be, yes, market companies are delivering what market is expecting, but the market has still continued to do much better. And that is largely because of the strong flows which we see from the domestic market. That is what the worrying point remains to be. Yes, macros are good, earnings are good, but the flows seems to be very, very strong, and the demand and supply is leading the market higher and higher. Somewhere I think market is going to get uncomfortable about these flows, and the correction will start setting in. I think that is what we are seeing today. Some amount of correction has already started. We are seeing, especially in the PSUs, and I think over a period of time we'll see in other sectors also.
Okay. When you look at this PSU correction, especially in the light of what has happened over the last 2-3 months in the railway space, in the renewable energy space, any sector within PSUs has really shone through. Is this a case where you will see a temporary halt in the rally, or are we done?
So I think basically more or less in some sectors we are done. So I think power is one space, power finance especially, where I see that most of the companies are now quoting it 3 and 4 time book. I think that is I'm being very aggressively priced. Railway space still continues to show very good promise because order books are still strong. You look at the budget, you look at the government actually promising new railway stations, upgrade in trains. So I think railway still continues to be a very good spot. Defense continues to be a very good spot. There also basically on all corrections you should continue to accumulate stocks. Power, even on the equipment side, I think there also we seem to be fully priced. I would take away profits from there also. And similarly in the PSU banks, I would take away profits there also.
Okay. Nishal sir, a lot of viewers' questions have also flooded us because they came to know that you're going to be joining us today and they had tons of questions for you. We've selected a few and we will ask you those as well over the course of this next 40 minutes odd as well. Since you talked about taking profits off from some of the pockets where which you have already seen a huge run up, there is one question on this exactly which I will take up first now. And this is from Neelam Sharma from Mumbai, who wants to know how to decide when should one really book profits from stocks.
So I think it's a fairly established science actually. You have to go back and look at saying that historically what kind of multiples that particular sector has got. If that multiple, if there is no change in the outlook of the sector or any very dramatic change, then I think that still that peak multiple still continues to hold. If the peak multiple has been achieved, I think it's a good time to take away some profits.
That's a very wise advice over there. And you know, since you talked about pockets like railways and defense, that has also shown a lot of promise, but you still believe that, you know, these are the pockets that one can continue to focus on even now. So, what kind of stocks would you be focusing on in the railways and the defense pack? Of course, we've seen. You know, the likes of Mazicon Dock, for example, Dynamics. We've seen the shipbuilder stocks like Cochin Shipyard really, you know, stun investors with the kind of short-term rally we've seen. Even the railways pack, it's been the both. It's been the wagon makers and it's been the monopoly holders like IRCTC or maybe an IRFC. Where exactly should now be the investors focus if somebody is thinking for a long-term, 3 to 5 years perspective?
I would go towards more of the avionics and the army side actually. I think the Navy side, the stocks have run quite a bit, basically, the Mazgaon docks and all. But I think Hindustan Aeronautics, BEL, I think those are the stocks basically one should look at. And I would want to actually say, clearly say that we don't cover any of the PSU stocks in our in Centrum. And obviously, I think each of these stocks, we may be recommending it to our clients or we have positions. So I think that's a disclaimer I want to put it up front. But we don't cover it officially in any of these stocks.
Okay.
Yeah.
Nishilji, when you look at the portfolio that Centrum makes for its institutional clients, what are the possible new additions based on third quarter earnings and any deletions that you have done over the last 1 month or so? It could be because of valuations that have peaked, it could be because of the story getting a bit weaker, or it could be simply that there have been no inflows. What have been the additions and deletions and reasons behind them?
So I think we just came out with a recent portfolio where our underlying theme remains to be that the interest rate cut scenario is going to happen over the next 6 month time frame. So interest rate as a theme one can play, and interest rate cut as a theme one can play. I think market is also playing that. If you really look at it, whether it is autos, whether it is cement, whether it is construction, these are all the plays basically which are more interest rate related plays. Banks is the only one sector basically, and it is the largest sector which is not playing to that theme, though it is a bigger beneficiary of interest rate cuts. So the exception is that, but otherwise, I think the market seems to be on that path only. Again, IT is also the same kind of a situation where you are expecting that the US is going to do well, interest rates are going to get cut in the US also, and economy is going to do well. So this is the broader theme which we believe basically is going to work out in the next 3 to 6 months, and we are recommending the same theme.
Okay. Within the auto, cement and construction pack, Nishchalji, what looks good to Centrum in terms of consistent valuations as also an expectations of good 3 or 4 quarter performance?
So there, in case of auto, our top pick still continues to remain as Maruti. They have been doing pretty well and continues to perform pretty well for the next 3 or 4 quarters. We continue to believe Maruti is going to do well. Some of the auto ancillaries are also pretty good. We like particularly one company known as Divki in the auto ancillary space. Then again, in case of cement is the other space you asked? Sir?
Yes, sir. And we couldn't get the name of the auto ancillary, sir.
Divki Torque. Divgi, Divki.
Divki.
Okay, sir. We'll look it up. This is something new that I have heard. Okay, so
So
Maruti.
it's a recently listed company, I think a year and a half back.
Okay.
They are into EVs and into transmission.
Okay, sir. So, and you mentioned cement as well as construction that would be running pretty well on the cut in interest rates. What catches your fancy in these two sectors?
Cement, I think the large cap Ultratech still continues to be our top favorite. And in the mid caps, we like Birla Corp. And in case of construction, we like L&T in the large cap. In the mid cap, we like PNC Infra.
PNC Infra, of course. Okay. Okay. So these are the 6 stocks that we've been able to get Nishchalji to name. How about IT, sir? The valuation difference between mid cap IT as well as large cap IT at the moment favors blue chips such as TCS and Infosys as also their smaller rivals like Wipro and HCL Tech. How are you playing this theme?
So we continue to be overweight IT, and obviously we prefer the large caps over the mid caps.
Okay.
But I think our top pick in the large cap remains to be TCS. Whereas in case of mid caps, we like MapMy India and Happiest Mind. I think these are the 2 companies basically we like in the mid caps space.
Okay. So those are the names as we can now find out from the IT pack as well. Let's take 1 or 2 more questions from our viewers list for you, sir. The next question is coming in from Sameer from New Delhi. He wants to know, is the rally in mid and small caps overdone? Should one book profits here?
So I wouldn't say that broadly one should say that it is overdone, but for certain stocks it is overdone. And mid cap and small caps, you have to actually look at it very stock specific. And there are certain stocks basically which are still value, and there are certain stocks basically which are really overdone. So I'm saying more stock specific. Please look at your individual stocks. And as I explained to you earlier, if they have hit their previous high because in terms of multiple, then you should go back and evaluate whether there is something new to something strategic change has happened in the company or industry. If not, then you should take away profits.
Any particular stocks that you can mention, sir, from the mid and the small cap space where you still find enough value for investors to even invest at this stage despite the run up that we've seen in these pockets?
I have suggested all these stocks which we have said in mid cap, PNC, Infra, Divki, each of these sectors which I spoke to you, I given you one stock. So all these in all these cases we like that mid cap
Okay.
stock.
Okay. Anything from the PSU banking basket, sir, that you like at this point in time, despite the run up?
I think there also, I think the large cap is in a much better situation. I think mid caps have really done runaway, and I think SBI still remains to be a top pick there.
Okay.
Yeah. And SBI has done pretty well over the last 1 month or so. We are already seeing record high levels at this point of time. Nishchalji, when somebody who's from overseas and he comes to you for guidance in terms of how should they be tackling the Indian markets from the current levels, and they obviously have deeper pockets because only such guys can afford views from Centrum Broking. What are the 2 or 3 things that you are telling them in terms of positives, and what are the 2 or 3 things that trouble your mind at this point of time?
I think as far as India is concerned, I think there are a lot of positives basically at the moment. So whether it is the policy stability, a positive government towards the industry, outstanding policies of the government, I think policy itself is basically very, very strong. That is one. So political stability is the second one which we are highlighting. And the third remains to be is interest rate, the way RBI has managed the whole economy. So whether it is fiscal deficit, record, I'm saying lower than expected, record tax collections. So I'm saying these are some of the things basically which are really outstanding for India. And in that scenario, basically, India and the growth which is being projected, once again, one of the best growths. So I think there are a lot of positives to talk about. The only worry which people have highlighted to me time and again is valuation.
Okay. When you talk about political stability between the time we spoke last and now, it seems that the opposition led India alliance seems to be in tatters, and the successive victories that Mr. Modi has notched up in state elections, plus the fervor of Ram Mandir, seems to be having a very beneficial impact on Indian stock prices. Of course, valuations have gone through the roof. Do you think this kind of scenario should continue till May?
I'm not a political commentator, so very difficult to say. But what I hear from people and market and what I see here is seems to be that kind of a scenario. So looks like most likely it's going to be like that.
Okay. With respect to this itself, we've got the next question from Mumbai. Dharmendra wants to know from you, which are the sectors that stand to gain the most if the current government really wins the elections? And why I'm asking you this is, and you know, this question is really timely at this point in time, is because Prime Minister Modi has already been talking about his third term. He's already been talking about some of the biggest decisions up until so far may be coming in his third term as well. And since you're also looking at the current realm and saying that there is a policy continuity, there is a political continuity that we are penciling in. So this question really warrants, your detailed answer on which are the key sectors and stocks that could perhaps benefit the most if somebody has to bet big over the next 3 or 5 years.
So I'm saying in the short term, one should really play the interest rate scenario. Interest rate cuts are likely to happen, and I think all the sectors which we had highlighted,
Sure.
they would benefit. On a 3 to 5 year horizon, I think the government policy has been very clear. Basically, they are saying we are going to do more and more Indianization of the defense sector. I think that is very clearly one to play. They are talking about big investments in green energy. So green energy, EVs, they will bring in basically a large change in the auto sector. So EV is the one basically which you should be focusing on. And third is basically continuously we will really look at it is the infrastructure spending. I think last year it was 10 lakh crores. Government is now mostly looking at upping that also by 25% again in next year. So I'm saying that's a very big number, basically 12 and a half lakh crores getting spent on the infrastructure. I think at least these three sectors seems to be very clearly in focus. And obviously railways is also going to be a part of the infrastructure. So you can look at railway as a theme also.
Okay. So could you name a few stocks from, say, the green energy and the EV space that you are betting big on? And green energy, would you be looking bet big on the solar players? Because that has been something that the government has focused on up until the budget as well. Or are there other realms also that you're looking at? In the EVs, we've already seen a sharp run-up in stocks like Electra Green Tech and JBM Auto, which we've constantly marked for our viewers on market today. But tell us, do you still see a lot of steam for these players?
So I'm saying you have to look at a horizon of 3 to 5 years. I think
Yeah.
some of these have really already done very well. We don't cover Olectra and also difficult to comment on that.
Okay.
The stock which I had earlier suggested, Divki, is a EV play, and one can look at that. Similarly, I think in case of green energy also, uh, I'm saying we cover one company which has been talking about investing very large amounts of money in the green energy is Reliance. And I think one should definitely look at it, though it is not looked in that terms. But I think bigger companies will invest a much larger amount of money basically in that space. So one should definitely look at it, and we are very positive on Reliance in that terms.
Okay. Nishchalji, let's dig in deeper into this green energy investments as also the products that are going to come out from this segment. When you look at a holistic picture for this entire environment, you have investors, deep pocketed investors such as Reliance and the Adani Group, which are putting in billions and billions of dollars. On the other hand, you have transporters who are trying to sort of shift their businesses towards this end, and you have producers such as Tata Power, NTPC that are also shifting towards green energy. In this holistic picture, what are the 3 or 4 stocks worth looking for over the next 4 or 5 years apart from Reliance?
So unfortunately, we do not have much coverage on the green energy space per se. But I think Reliance is a pretty large space to look at. Though I think obviously the other two, the telecom and
Yes.
retail has actually overshadowed the first part. But I'm saying they are very big in that space also. The other thing I would look at is basically the power producers and NTPC and Tata Power. Though both seems to be in a good space.
Okay. So this is the broader theme as far as the green energy is concerned, NTPC, Tata Power as well as RIL. Okay. Nishchalji, when you talk about disappointments and the fact that 53% companies in the third quarter who have declared their numbers have actually downgraded their expectations, where have you found froth in terms of valuations? Which part of the market, apart from PSUs, you think is still to react to gravity?
I think then you have to go stock specific per se. I do not see the whole sector being overvalued. I think to an extent it was real estate which has got corrected now. But I don't see the whole sector getting overvalued. But I think specific stocks within a sector basically are still frothy.
Okay. Any particular names that you would still be positive on from the real estate space from a long-term view, sir?
I think let's wait for correction basically. At the
Sure.
moment, I think it's a good time to take away profits.
Sure. Okay, I'll talk about the other space, and that is pharma space that's been now looking positive at this point in time. What is your own view of the entire pharma and healthcare pack, be it the main pharma players like Dr. Reddy's, Cipla, Sun Pharma, maybe the hospital stocks and the diagnostic chain majors? How do you look at this entire pocket of 3, and where exactly are you more positive on, sir?
So let me put it like this. Basically, I think the healthcare, which is the hospital chains, basically, these are the really long-term, next decade kind of a story. They'll just continue to grow 10-12% basically for the next decade. That's the biggest upside basically, which will get through. In the medium term, you will have pharma, which is doing well because US has started doing well for them. And domestically, anyway, they were doing well. So I think the medium term stories would be like this. As far as the third sector, which what was the third sector you spoke about? Third part?
I wanted to ask you on the diagnostic chains,
Yeah.
the likes of Divi's
Diagnostic-
Laboratories. Yeah.
Yeah, so diagnostic chain, we are a bit cautious about that sector because there is too much competition on that. And in the recent results also, there has been disappointment as well as they have not been able to pass through the price increases. Competition is very severe. So I think diagnostic for the moment is avoidable.
Nishchalji, when you look at the broader NSE 500 or even the listed space across the National Stock Exchange, which part do you think is yet to participate, how should I say, wholeheartedly in this rally? What are the laggards that you think of?
So FMCG is one basically which has been the market darling for decades, has not participated in this whole rally at all. It has been a surprise, but I think this is sort of worry for
Yes.
at a national level also, that the rural doesn't seem to be really doing as well as the urban is doing, and that is immediately getting reflected in the FMCG sector. Now, in this last quarter, basically, some of the companies have started showing saying that there are green shoots on the rural side also. But it was a bit of a surprise to us that it has taken such a long time for the rural to revive, because I think this year monsoon was okay. Uh, Construction is doing very well. So I'm saying these are the two main spaces basically where rural people get employment. So I thought it should have been much faster, but we have not seen. So that is a disappointing basically, and that sector has not participated in this rally at all.
Okay. And it's born from the fact that over the last 4 years, in which Sakshi, the Nifty has doubled, Hindustan Unilever has gone nowhere.
Yeah.
And this, of course, is the crown jewel of the FMCG sector. From a low of about 1700 to about 2400, this is what the stock has done over the last four odd years. And Nishchalji is absolutely right that this is a sector where you gauge how rural incomes are performing, because आटा दाल चावल चीनी शैम्पू सोप सभी लोग खरीदते हैं, और यहाँ पर अगर कुछ नहीं हो रहा, so that's a problem. The overheated areas, Nishchal ji, the zones of IPOs, the zones of SME listings where you see an IPO being subscribed 10,000 times and the listing pop being 5x the IPO price. How are you mentally dealing with that problem?
So I've seen several of these cycles. Several of these cycles basically have always told us that this kind of, it's like the pendulum. Pendulum just goes both the ways, up and down, goes extremes. So we are seeing this kind of extreme situation out there. But having said that, I don't think that it's totally froth that we have in the smaller market. There also, I think you find very genuine companies. But obviously, given that there is so much liquidity driving the whole thing, that's why you see these kind of frothy valuations and frothy collections. But I think it's a good market which has got developed, because that's the first stage which most of the companies want to access before they want to come onto the national stock exchanges. So it's a good learning for them.
Okay, so that's as far as the IPO space is concerned. The other pocket I wanted to ask your view is the new age tech space. We've just seen Zomato's earnings about 2-3 days back, and the stocks jumped 10% in 2 days. Then on the other hand, we have Paytm scenario that just emerged over the last 10 days, the kind of regulatory hurdles that it encompassed at this point in time. We also saw Mama Earth, Honasa Consumer, that is PB Fintech, Delivery coming out with the earnings. How have you looked at all of these at this point in time, and is there a shift in your stance on these new age tech stocks vis-a-vis earlier, sir?
So all these companies were startups, right? At some point of time, 10 years back, whatever. And I think this was expected to happen to them. Some of them basically would get their business right, some of them would not. And some of them were basically getting a lot more money because of whatever reason, and they were building a business basically which was not profitable. So I'm saying when you start coming to the listed side of the market, the listed side of the market is ruthless. They will give you 1 or 2 quarters, but then they will obviously start looking at you basically the way they have historically looked at the at the listed market, which is show us profits and we'll give you valuation. And I think these companies have learned very well. I would give top honors to them. As soon as they realize basically that it's not only the top line basically which drives the listed market, They have changed their strategies. You look, Zomato has come with a profit. PB FinTech is almost close to a profit. I think Paytm is struggling a bit, but I'm saying these are all emerging sectors. So it's all very young. So I think these kind of experimentations, learnings will happen. Some of them will be winners out of that. Some of them will, in next 5 years, you may not find them at all. But that's the way basically the industry has to evolve. And I'm not surprised at all.
I know, sir, but you know why I ask you this question is because over the last 3 years, we've seen this new age investors come to the markets too. And for them to relate to these companies is much easier than all the traditional companies that you and I have been looking for some years now. But tell us, how would you advise these new age investors to look at these companies? And because right now they have the maximum holdings in such companies and they are sitting at huge losses.
So I think they have to also understand basically that at the end of the day, the listed market has not changed for 100 years and it will not change for another 100 years. People will still follow the P to E will still be the most important ratio to look at it. The price to book value is going to be another important ratio to look at it. The ROAs are going to be still very important ratios. So that cannot change. So all businesses have to be evaluated because you are putting capital and people are going to ask for return on that capital. So that's the way basically the market is. That's the basics of finance. That cannot change. So people have to understand that the whatever valuation you may give it, but market will ask them basically where is the underlying profit. If the profits are not there, markets are going to be very ruthless on that. So new age investors have to understand that once the companies get listed, it has to follow the norms of the listed space.
Absolutely. I think no better advice could come out of Nishchalji, what he has said. If you think the listed space will follow the listing and the valuation norms of the private equity space, then there is a very seriously negative surprise awaiting you after you get listed, and some of these companies have suffered very badly. I'll tell you a very interesting story, Sakshi. One of these new age promoters, we met somewhere, and the gentleman in question said, I will be in a profit 2 years from now, and that quarter's profit would be 1 crore rupees. So why isn't the market at least holding me at my IPO level? So I had to tell him that we'll look at your stock at that point of time when you declare 1 crore profit. What is the great reason for us to continue holding the stock for 8 quarters in a row and then wait for you to declare a quarterly number which may or may not happen? Be that as it may. Nishchalji, apart from the FMCG being disappointing, I'll come back to your original thesis where we see rate cuts in the pipeline, and therefore bond portfolios of PSU banks will give fabulous other income component to these companies. You've mentioned SBI as one of your major picks in this particular sector. Is this broad thesis in sync with what will happen on ground, that bond portfolios will return superb returns?
So for held to maturity HTM portfolios, definitely I think it should be very good returns for them. So those profits, what you are, maybe banks have to make some bigger provisions, because I think last 2-3 quarters have been pristine for them. So at that point in time, I think those bond portfolios will support the profitability of these banks. But over a longer period of time, why I am a bit uncomfortable is I am still not sure that the trajectory of ROEs of the PSU banks have really changed. And this kind of ROEs which they are showing now is a sustainable ROE. If that market starts getting the confidence about that, I think the price to book multiples of all PSU banks will change.
That's a fair point. But
go off further from here.
And how many quarters would you give that change to happen, provided it does?
I will give him a cycle actually. It will not be a few quarters. it has to be a cycle of 3 to 5 years for us to believe basically that this is a sustainable ROE numbers.
Wow.
Fair point. Okay.
Yeah.
The other thing that's about to happen in 2024, Nishchalji, is the entry of the Indian sovereign bonds into the JP Morgan Global Bond Index. How do you think the local scenario as well as how global bond investors look at India will change? You've also mentioned that fiscal deficit is under control. The RBI's management of the economy has been fabulous, and we seem to be a relative island of safety globally.
Yes, and I should mention that this was another important point basically when you asked about what you like about India is this 25 billion, 30 billion, which is expected to come through once we get a part of the JPM Morgan bond portfolio, because that will help us basically in containing our fiscal deficit further and help us in maintaining our currency. So these two things will obviously be very positive. How I see this happening, basically, I see it helping RBI in cutting rates. Basically, so right now, why RBI is not preempting the rate cut ahead of the US is basically because of the fear that it may have an impact on rupee. But if we have this cushion of $25-30 billion in your kitty, basically, to manage, to help bolster the rupee, then obviously we can cut the interest rates a bit more, and that will help us on growth side. It will also bring down our interest rates, helping the economy on a broader scale.
Okay. With that, Nishchalji, our time with you draws to a close. Thank you so much for such wonderful advice, and I'll just repeat the stock picks that Nishchalji has suggested for the medium to long term. In the auto space, it's Maruti, and I have been able to find out it's Divki Torque Transfer Systems Limited, trading at 839 rupees. That's the other pick from the auto ancillary space. Apart from that, he likes Ultratech Cement and Birla Corp from the cement basket, Larsen Toubro and PNC Infra from the construction zone, and the lone pick from the public sector is State Bank of India. If you're interested in green energy, then it's Reliance Industries, NTPC and Tata Power. The next decade in terms of pharma belongs to hospital and healthcare stocks. With that, Nishchalji, thank you once again for such wonderful 45 minutes. And we hope that you will be a regular visitor on Market Masters from henceforth.
Thank you,
Thank
sir.
you. Thanks a lot.
Okay. That, ladies and gentlemen, was Nishchal Maheshwari, the Chief Executive Officer for Centrum Broking on the institutional equities side, talking to Sakshi and me in our episode of Market Masters. There are a lot of interesting things that he's mentioned in terms of positives as far as the markets are concerned. It's the policy stability, the industry outlook as far as the government at the center is concerned, political stability, and the biggest theme going forward is the cut in interest rates, which seem to be in the pipeline. Sakshi.
Absolutely. It was a wonderful conversation. And with that, we wrap up this very special edition of Market Masters. But do stay tuned on to Business Today TV as action continues on your screens on the other side too.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Celebrate 32 years of leadership in business news with Business Today. From the groundbreaking AI cover of Sundar Pichai to PM Modi's exclusive on G20, we redefine headlines. Now our 30-second